In today's video, we're diving into a topic that's gaining traction in economic discussions worldwide: the implications of major economies abandoning the US dollar. As the world's primary reserve currency, the US dollar has long been the backbone of global trade and finance. But what happens if countries start to shift away from it? We'll explore the potential consequences of this shift, including how it could reshape international trade dynamics, impact currency stability, and influence global economic power structures. This is not just an academic exercise. The ramifications could affect everything from the prices of goods to the stability of financial markets. So, stick around as we unpack this critical issue and its significance for the future of global economics. To understand the current landscape of global finance, we must first explore the historical significance of the US dollar as the world's primary reserve currency. Following World War II, the Bretton Woods Agreement established the dollar's dominance, linking it to gold and making it the preferred currency for international trade. Key events, such as the Marshall Plan and the establishment of institutions like the International Monetary Fund, further solidified the dollar's status. Over the decades, geopolitical shifts, including the rise of the European Union and the emergence of China as an economic powerhouse, have influenced currency preferences. These changes have sparked debates about the sustainability of the dollar's supremacy and raised questions about the future of global trade dynamics. Understanding this history is crucial as we navigate today's economic challenges. In recent years, several major economies have begun actively reducing their reliance on the US dollar, signaling a significant shift in global finance. Countries like Russia and China are at the forefront, motivated by factors such as economic sanctions and the desire for greater financial independence. These nations are forging new trade agreements that prioritize alternative currencies, aiming to diminish the dollar's influence. Additionally, the rise of digital currencies, including cryptocurrencies and central bank digital currencies, CBDCs, is reshaping the landscape of global trade. These alternatives offer the potential for faster transactions and reduced transaction costs, appealing to nations seeking to diversify their currency reserves. As these trends continue to evolve, the implications for international trade and economic stability could be profound, warranting close attention. The potential abandonment of the US dollar as the dominant global currency could significantly alter trade dynamics worldwide. A decline in dollar dominance may lead to increased volatility in international markets as countries adjust to new currency preferences. This shift could also impact inflation and interest rates in the US. A weaker dollar might drive up import costs, leading to higher inflation, while the Federal Reserve may need to adjust interest rates to stabilize the economy. Emerging markets could face unique challenges as well. Their currencies may experience increased pressure and volatility if they are not backed by strong reserves. Additionally, these nations might struggle to attract foreign investment, further complicating their economic growth. Overall, the implications of moving away from the dollar are complex and far-reaching. The abandonment of the US dollar by major economies could significantly alter global power dynamics and alliances. As countries seek to establish alternative currencies, we may witness a realignment of international partnerships, with nations gravitating towards those that share similar economic interests. This shift could challenge the US's long-standing influence in global affairs, prompting potential responses from the US government and its allies, such as strengthening existing alliances or forming new coalitions to counteract this trend. Additionally, the implications for international relations and security could be profound. A decline in dollar dominance may lead to increased tensions as countries navigate new economic landscapes. As nations reassess their positions, the geopolitical landscape could become more fragmented, raising questions about stability and cooperation in an increasingly multipolar world. Several countries have begun to actively abandon the US dollar, with China and Russia leading the charge. China has implemented strategies such as promoting the use of the yuan in international trade agreements and establishing currency swap lines with various nations. This has allowed China to reduce its reliance on the dollar while increasing the yuan's global footprint. Similarly, Russia has sought to decrease dollar dependency by diversifying its foreign reserves and increasing trade with countries like China and India using their local currencies. The outcomes of these efforts have been mixed. While both nations have made strides in reducing dollar reliance, challenges remain, including market volatility and geopolitical tensions. The broader implications for global economic stability are significant, as these shifts could lead to a more fragmented financial system and increased uncertainty in international markets. As we look ahead to the next decade, the future of the US dollar in a changing global economy presents several potential scenarios. One possibility is that the dollar maintains its status as the primary reserve currency, bolstered by the US's economic strength and military influence. However, the rise of technology and digital currencies could significantly reshape this landscape. Central bank digital currencies, CBDCs, and cryptocurrencies may gain traction, leading to a more diversified currency ecosystem. This shift could pave the way for a multipolar currency system, where multiple currencies coexist and compete for dominance. Such a scenario would challenge the dollar's supremacy and could lead to increased volatility in global markets. Ultimately, the evolution of the dollar will depend on geopolitical developments, technological advancements, and the responses of other nations. We've explored the significant implications of major economies abandoning the US dollar, from shifts in global trade dynamics to potential impacts on inflation and geopolitical power structures. We discussed how countries like China and Russia are actively reducing their dollar dependency and the broader consequences this could have on economic stability. As the landscape evolves, it's crucial to stay informed about these global economic changes and their potential effects on our lives. If you found this discussion insightful, please consider subscribing to our channel, liking this video, and sharing it with others who might be interested. Your engagement helps us bring you more content on these important topics, so let's continue this conversation together.